My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends. I'm just trying to make a little money. My job is not just to entertain, but to educate, teach, put days like today in context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. It's not often that you see a $100 billion company born right before your eyes. But that's exactly what happened today with the infant that is Rivian, the electric vehicle maker that just came public and initially reached a $100 billion valuation when it first started trading this very morning. Yep, on a not-so-hot day for the averages, with a Dow declined 240 points, S&P sank 0.82%. The Nasdaq nosedived 1.66%. At one point, it's much uglier, though. Rivian stock shot up nearly 30%, though it closed below the price of its first trade. Now, I know it's jarring to think that this company, which had only delivered 156 cars as of the end of October, is basically the same size as the market capitalization of General Motors. However, I am sick of this. Because, you know what? Because that's a terrible comparison. I mean, electric vehicles are in a league of their own compared to old-school auto companies that still rely largely on the dreaded internal combustion engines, or ICE, as they call them. That doesn't mean Rivian necessarily deserves to be worth this much, but it does mean you can't dismiss it out of hand. Of course, the skeptics out there, well, they find this analysis absurd. They think that my analysis itself is sophomoric and soporific. Only 156 cars, for heaven's sake. But Rivian's stock price is set by buyers who believe that electric vehicles are taking over the world. And there are enough true believers in the money management business post-Tesla's phenomenal success to send this stock into the stratosphere, and it may not be done. What do these true believers see? They see a company that's built the world's first all-electric pickup truck. They see the electric SUVs. They see the electric vans on the way. I have to throw in a purpose-driven. You always have to say purpose-driven. More importantly, they see Rivian's backers. So let's talk about them for a second. As I mentioned earlier this week, Ford will soon be Rivian's biggest rival thanks to the electric F-150 coming out next year. Yet they own 12% of Rivian. Talk about an endorsement. On top of that, Amazon owns nearly 20% of this thing, and they've already ordered 100,000 vans. While Ford might cash out to build out its own electric capabilities, I, for one, hope they build a battery mega gigafactory. Amazon seems like a long hauler. The sustainability team is saying that they buy any and every electric van they can get their hands on, not just the 100,000. Now, it's not often you see a company with a sold-out production line before it even enters mass production. But that is Rivian's pedigree. Now, you might say this is all ridiculous. I mean, did you see the action in the rest of the market today? The averages were atrocious because the market showed its true colors. Now, remember last night when I told you things were too confusing and the signals were too contradictory, so we had to wait for more clarity before we could make sense of the situation? Well, today we got the clarity. The red-hot consumer price index numbers. I mean, hardly unexpected, as I told you. How can those be revelatory? Yet it didn't matter. They still managed to send the bond market into overdrive and, of course, over a cliff. Yesterday, bond yields were going down. I figured that might mean, well, it could be a false tell, right? I mean, we don't know where bonds are going to go. What we do know is that if there's inflation, rates are supposed to go higher. And sure enough, today, bond yields surge because there's a new sense that the Federal Reserve needs to raise interest rates quickly in order to cool down an overheated economy. That's the true colors. Again, I expected the October inflation numbers to be hideous, but as I said yesterday, my expectations aren't what matters. You aren't either. You needed the obvious slap-you-in-the-face inflation data to provoke the beast, forcing it to reveal whether it's a bull or a bear. And today, the URSA did indeed turn out to be a major bear. Every growth stock that trades based on its distant future earnings got slaughtered because that's the group that inflation hits the hardest. So you might wonder them, why the heck wasn't Rivian slaughtered too? And then it only produces 156 vehicles, most of which were sold to employees. I mean, this thing reeking of the out years kind of thing that inflation hurts, right? It's trading on what it could make in 2030. How can a stock like that price at 78 and close at $100 when the market's turning against exactly this kind of investment? It's simple. Rivian's not rallying in spite of the growth stock sell-off. The growth stocks sold off in part because of Rivian, as investors sold large ones, sold off similar assets in order to get as much stock in as they could or participate in the deal. So you got to understand how the market works if you want to understand Rivian. Given all the interest in this one, the Rivian IPO is practically guaranteed to be red hot. it was inevitable that it would go to a premium. In other words, that it would go above where it was priced. How much of a premium? Again, this is where Rivian stock distinguished itself as an entity separate from the pummeled averages. Successful underratings are all about something called allocations. Who gets it and who gets shut out? Usually the company comes public is pretty clueless about the process, so they let the syndicate desk be in charge. Normally that means lots of money managers end up getting sweet deals because the syndicate desks need to keep them happy, so they'll continue to buy new merchandise, so they'll continue business. It's a reward. But this time was different. This time, Rivian CEO R.J. Scaringe, he was able to call the shots because his stock was so in demand. So he decided to give it to the entities that would pay the most, the sovereign wealth funds and large institutions, not small-time hedge fund flippers or home gamers. He wanted to reward people who would stick with him, okay? I don't know the man, but obviously he's very thoughtful about this stuff. These accounts typically put in for 10% of the company's shares that are coming public. Obviously, they aren't going to get that much, but that's how you signal you want a ton of stock to the deal makers. So what happens is these gigantic non-flipping institutions then get a nice chunk of the IPO, but because they're so darn big, they need to buy much more if they're going to have what's known as a meaningful position within their funds. So they come in after getting their allocation and then proceed to sell the shares of fast-growing techs. We saw that selling all day until near the end of the day, and then they buy more Rivian shares once they start trading. And that's how a company like Rivian, that's only sold what amounts to a handful of vehicles, can trade at the same market capitalization as GM. It's the mechanics of the market, people. Now, you could argue these institutions are insane. That given the inflationary nature of the economy, the Fed will have to raise interest rates rapidly, which will eviscerate Rivian's stock. No, that's short-sighted. It's absolutely true that inflation's way too high, and stocks are simply worth less than they were yesterday because their future earnings are being eroded. We see that data. We say, hey, you know what? We misjudged when we were very bullish yesterday. But Rivian is not just any stock. When Amazon reloads and reloads and then reloads again with orders, then you can make the case that this could be the next Tesla, and the next Tesla could easily earn $1 trillion valuation. And believe me, can we just accept that that's what people are chasing? Again, I'm not saying Rivian will definitely be the next Tesla. I think the future all depends on management's execution because mass production of electric vehicles it's incredibly difficult. And if it wasn't, don't you think the traditional automakers would have gotten in on the action a few years ago? Plus, I don't think this is really a game over for the stock market. No, a scorching CPI number will have some lasting impact. Absolutely. It's been able to create several days' worth of hand-wringing and selling when we've gotten them before. But ultimately, this could turn out to be what's known as a rearview mirror number. What if inflation's already peaking? What if the recent decline in oil and natural gas is for real and everyone's just ignoring it? What if the most basic sign of inflation has hit a wall? What if we're finally sorting out the port congestion problem, not people working on it? What if housing continues to cool? You know it's starting to happen in a bunch of neighborhoods. Mortgages are getting more expensive. Then you'll be kicking yourself for not buying stocks here. The amazing thing, of all the stocks out there, Rivian might just become a safe haven because at the moment there simply isn't enough stock around to sate all the buyers, at least not at these prices. Maybe they have to go higher. It could become a fixture of the new tech world, at least until the lockup on insider selling expires in 6 months. Then things could go a little tougher. So let me give you the bottom line. When you see a stock like Rivian exploding right out of the gate, you need to understand that it's not just that people believe in this electric vehicle story. It's also because the mechanics of the market are very much on the side of the bulls when it comes to Rivian.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.